what happened with the share Just Eat Takeaway this week, and what to do now.
Yes. They Just Eat Takeaway gave a trading update, and the official figures they will come out on the 1st of March. So that's the quarterly figures and automatically the yearly figures. And the trading update was really good. And we will explain what was good, but not everything was good. So we also want to explain what's not good. And then we come to a conclusion if you should buy it, if you don't have it, or when you have it, what you can do. And we do that, as you, I think, used to it now from us. We do it from a fundamental perspective. I will do that, and you will do it from a technical perspective. That's why I have Taco has here his computer and always charge and everything.
Totally prepared.
Shall I start?
Yes, please.
Because on Wednesday they came with the trading update and the share gained 12%. So then you think, okay, that's great, and it is great if you have the stock, but that was still down 40% year to year. Because can you say something a little bit only about the chart and not about the technical analysis, but what the chart of takeaway? Because it's now trading at how much?
Around 24 euros.
Yes.
And yeah, I will later mention that also, but 6 years ago, more than that, it got its listing, also trading around 24 euros. But
Really?
you asked me about what it did. It went to over the 100 euros.
100 euros.
Yeah, so trading at 24 after this increase.
When was the top of your 100?
It was like around the end of 2020 and beginning 2021.
Wow, so then it still is 75% lower than the top.
Exactly.
That's a lot.
Yeah.
What do? Just to take away, they deliver food. So they had great years during COVID, of course. And when COVID, and they also did a lot of takeovers, Grubhub, for example, and the market didn't like it, and they made losses. They never paid. So when you bought it 6 years ago for this price, maybe I hear you thinking, okay, but I have the dividend. No, because they never made profits in the last years, but they never paid out dividends. So no dividends. Okay, so what was good from the figures? Because in 2021 they made a loss of minus 350 million EBITDA, and in the first half year of last year, so 2022, they lost another 134 million. But they announced this Wednesday that they had a really good second half of the year, and they made a profit of 150 million. So bottom line, they have 16 million profit. And that was better than expected. Where is this move coming from? Did they have more revenues? No, mainly it's because of the cut of costs. They had even in Q4, so half of the year, they had 12% less orders, and their turnover was 230 million versus 261 expected, and also the revenues were a little bit, but their costs were really much better. They improved the revenue per order, they improved the delivery costs, but they also let a lot of people go. And I saw one figure that took my attention. They let 170 people, 170, go on the service desk department. And I think if you do that, I think your service will go down automatically.
I suppose so.
I don't understand if you can still offer the same service with 170 people less. I don't know how many they have, but probably they don't have 10,000 people on the service desk working. So that I found a different one. And they also said that they stopped in countries where they saw that it was a small chance to get market leadership. So they removed from, and they also cut the yearly ski trip. I saw that as a source in the Dutch Financial Times, Financieel Dagblad. They cut it because that costed millions. They did it yearly. Also in the years that they make a big loss. So no skiing for the employees of Just Eat Takeaway this year. Okay, where are we now? It's a company with 15.5 billion of assets and 2.5 billion of debts. And I think debts are getting more and more important because the cost of debt is increasing because of the increasing of the interest rates. Then the last thing, they gave also an outlook, and it is expected that they will have a profit of 225 million for this year, 2023, versus the 60 million of last year. How? They said, the CEO, he said, okay, we can still cut a lot of costs, for example, IT costs, because after the takeover of Grubhub, they have 2 different systems, and there are a lot of synergy effects in bringing all together to one IT platform. And also they expect a lot in growth of revenues. And that together then is expected 225 million of profit. Okay, what can you do with all this information? To conclude from a fundamental perspective, I will do after your technical analysis.
Okay, that's good. I told you before, the company got its listing in Amsterdam the last quarter of 2016.
Mm-hmm.
It went in March 2017 to the AMX and
Midcap index.
yes, the midcap, and the 4th of June 2019 it went to the main index, the AAX.
Mm-hmm.
The 23rd of December 2019 it went back to the AMX. The 23rd of March 2020 AAX, and the 19th of last year, I think we spoke about it because it was replaced by Exor. It went back to the AMX. So a lot of movement there on the Dutch
And that's a
markets.
technical analysis? No.
No, but that's what happened with the. No, it's by far a technical analysis. I told you that the share price 24, it was in the 2016, going up to 100, back to 12. I remember a lot of people speaking with the buying at the higher levels and then back to 12.
Yeah.
But if you see the movement from 12 also back to 24 now, so there's a lot of movement. But we are not only focusing, of course, on the last movements this week. I took we'll put the chart in the screen. From a technical point of view, we looked at the dual moving average. And
Why you took that one?
well, I think it's quite clear that the trend was down, since 2020. We said end of 2020, so that's quite clear. And also the recovery of the last months is interesting, but even today or this week, the extra recovery, I was really interested to see what does that do with the moving average. And as you can see, the short-term moving average, 50 days, now crossed the long-term decreasing moving average that we had, the 200 days. So actually it's not only a one time moment that it's only getting up one. It's like really maybe a changing of the trend, and one of the indicators for
Positive
that.
trend, so because when they cross those lines, in this case, that is a strong upside potential.
Exactly, yeah, that is seen by the technical analysts as a strong movement. So only the 12%, it's nice to have it, to buy it one day and to sell it, but if you are, for the longer term, it's very important to see that the trend was down, obviously, from 100 to 12. Back to 18, it's nice, but now really the short-term moving average crossed the long-term in a positive way. So I think that's, an interesting analysis. Even if I say it myself.
No, it is. Because, to finalize and to conclude, I think it's on the same level as you said when it came on the market 6 years ago, 24, around 24. So nothing happened. It went up to 100, came down to 12. It's now again at 24. From a technical perspective, it's interesting because the two dual moving averages used, they are crossing each other, and in this case, it's a positive sign. So markets can go up. They are in a bull market, because something you can say it like that. Yeah. From a fundamental perspective, I think that they will manage to cut further costs, IT costs, because that's in their strategy, so they will execute it. I think the growth in revenues is also positive, but that's challenging because when in the last quarter they had 12% less orders, how can they turn that one, okay, that they made a good profit because of cutting costs? That's good, but they didn't get that good result from more revenue. So that's always more difficult to realize. So I think that's a challenging part of it. And altogether, if you look at if they will get the 225 million of profit with a debt of 2.5 billion, then you have from an income versus debt 10 times the ratio, and a lot of people think that's a lot.
Yeah.
On the other hand, they come from losses, 350 million losses in 2021. So I think it's a challenging market where they're operating, but also a challenging plan that they have. But if they succeed, then they can accelerate. And from a technical perspective,
Interesting moment here now.
yes. So we wanted to discuss this, and also I wanted to say this is a positive sign based on the previous estimations of Just Eat Takeaway. So hopefully this is also the sign, this is also the beginning point for a lot of figures that will come up the next weeks, quarterly figures.
Exactly.
And they will be positive, because we hope that we are also positive, no?
We are positive.
Thank you for watching.
Thank you.
Give us a thumb. See you next week.